This conference will now be recorded.
What's going on? Peace, everyone. It's Truths and Beliefs coming to you with a quick market update, mainly focusing on the new tokens, assets that have been added to the Instadapp protocol under the Polygon network. That will be my main focus today, but of course, we'll go over the two head honchos in the space right now, Bitcoin and Ethereum. So let's go ahead and jump right into that right now. Currently, I have up the daily Bitcoin chart with the Fibonacci pulled out to the high from November 10th, which was 69K. Right now, we can see, close this, we can see that price has been rejected by a wick up to the 50-day moving average, which is coming in for Bitcoin at $42,809. What I can see happening from here is Bitcoin coming back down to the 20-day moving average, which is also corresponding to the 236 on the fib, both coming in at 41K, the 20-day moving average 41,424 exactly, and the 326 coming in at 41K 457, excuse me. So from there, this is what I can see price coming back down to, both of those points, that 41K area, which is previous support back in January 7th through the 19th, 2022, as we can see there. Also coming back, if we even go a little bit further, that was support level September 30th before we did shoot up. So yep, that's what I can see happening there. Then get a crossover, this 20-day moving average over the other moving averages. Then the next target will be up to the 200-day moving average, which is also corresponding with the 382 at 46K, the 382, 46,721 to be exact, and the 200-day moving average 46,688. This is all based off of a Bitstamp chart. So that's what we can see there. We can also look at the other chart that I had showing a descending triangle for Bitcoin. And here, a previous demand zone became a liquidity zone. So now I'm looking for this liquidity zone, which we sold off here, to become a demand zone and gaining people's interest to push the price back up to the measurement of the descending triangle, which is about 55K. And that will be a previous level of support before price broke down on December 2nd. So looking to get back up above in that range, consolidate, then move higher from there. That's the bigger play, but right now we can just focus on the micro in this previous liquidity zone that needs to change over to a demand zone. As mentioned, the bottom of it is coming again with the 20-day moving average, which is 41K. So we need to hold above that price on the daily to even move higher. If not, we could break back down to about 39K, which is really no level of support here on the daily, but we did get a wick down from January 10th is why I marked that area. Maybe break down to below here, then wick back down again. Or we can consolidate on the 20-day moving average for a few days and then gain interest and push the price up, making it a demand zone. Let's go ahead and head over to Ethereum. So Ethereum, let me remove this trend line. And I have the fib already on for Ethereum. And we can see that Ethereum is right now coming off of the 382 on the fib. Price right now is below the 20-day moving average and the 382 on the fib, coming in at $2,900. The 20-day moving average is coming in at $2,937. So we need to see price raise and hold above the 20-day moving average. If not, we can ultimately see price come back down to the 2,447 area. And that's what I see for Ethereum. We can even look at the indicators, the MACD showing weakening positive momentum. And we can also see on the RSI that price is moving back down, about to hit that 45 level, which is a sign to me personally of getting out. Again, this is not financial advice. I'm not a financial advisor, nor am I a fiduciary. Anything I say is for educational, and you can use it as entertainment purposes only if you don't take action. Please do your own research and review the charts to confirm what you see. And this is what I see happening for Ethereum right now. The next level, if we can get back above the 20 and push up, would be $3,283. But right now, we're looking at the downside. I'm looking at the downside back down to $2,447. We can also look at another chart of Ethereum, which here I have a descending triangle as well. Right now, Ethereum's coming back down to back test the triangle. The back test I have coming in about $2,886. We're currently at $2,899. So if we can't back test and hold this triangle, again, I mentioned the downside, which I wouldn't be surprised, and we could still end up playing out this descending triangle, but just not on this try. So let's go over to the Instadapp Polygon assets that have just been added. I just wanted to go and give an analysis of those because they can be very useful right now. So we can look at Balancer on the daily. We can see that we did get a wick up to the 50-day moving average. And now the candle is trying to hold above the 20-day moving average, coming in at 13.86. We're right now at 13.89. You need to get a daily close above, even some 4-hour closes above that 20-day moving average, which on the 4 hours coming in at 13.97. And that same wick up on the 4-hour I see here from the previous closing at 7 was up to $15. And we can see that we did get the crossover for the 20-day moving average on the 4-hour for Balancer. This was February the 3rd, making a gain of about 26%. Not bad at all. And now it seems that we're trying to find and break back above this 200-day moving average, which could put us back in the game. But first we need to get above and close above this 20-day. That's what I see from Balancer. Look back at it on the daily and look at these indicators. Weakening positive momentum. But I do see that we have a higher high on the price and a lower low on the indicator. Higher high on price, lower low on indicator. Bearish. So potentially we won't make that close above the 20-day and push back down to this area of consolidation that we have here. Which we could now consider a demand zone. The price built it up and shot up. So now potentially it can come back and back test the top of this demand zone and push back up from there, or it can come back in and gain more interest from people and then potentially switch on us to become either a demand or a liquidity zone. It all depends, but right now I'm seeing weakening positive momentum. So I wouldn't be surprised if we come back down in that area. On a weekly, you can see that the wick down from the week of the 7th, February 7th, it almost touched the top of that zone. On the weekly, we can see that we have weakening negative momentum and the potential move up from where we are now to the 20-day moving average on the weekly, which is about a 27% gain, up to 1867. Let's play it out on a daily first. Come back down, as I mentioned, found some demand, and then push the price back up. Let's go ahead and move on. Look at Ghost. Ghost is basically in the same situation. It has found support at the 200-day moving average. And right now it's trying to get back above the 20-day moving average. Until we get back above that area, I would set an alert if you were interested at about, I would say $2.05, just to keep you on notice, as if you do make a daily close above the $2.06. But I am seeing a weakening positive momentum, so we again, as in balance here, we make it a push back down into this previous zone here, find support on the 200-day, then push back up. And as we can see, back in October, let's say October 27th, Balancer did shoot up from that area, but we also had the crossover of all the moving averages start on about October the 15th, which was a confirmation. Right now we have the 20-day moving average crossing down. So until we get that cross back over, we're going to score higher prices. Look at this on the weekly too. Again, we would need to make a close above the weekly 20-day moving average, which is coming in at $2.09. So until we see that, we could potentially push back down to $1.72. That's looking at it on the weekly. And that is the extreme pushback. We're just starting off on a smaller scale. We could pull back to about $1.88. Let's move ahead to a link. You might as well start off on a weekly. On a weekly, we have strong negative momentum on the MACD. RSI is down below 45, so I wouldn't be surprised if a link comes back down to $11. We can see that the 20-day moving average has crossed over the 50-day moving average. So that's what I could potentially see happening. And that is about a 30% decrease from where we are right now, which can be an opportunity to discharge some debt on Link, using Link on Instadapp. Let's look at it on the daily. On the daily, we can see that we do have weakening positive momentum. We also have an RSI that's headed back down, in my opinion. We do have previous support at about 15.78. And if we can't hold that support, I can see price pushing back down to about 13, maybe a wick down to 13, or maybe even move the body down that way as well, because we did have previous bodies down July 20th, 2021. Essentially go back down to that area. We've seen what it was in a weekly, that was 30%, and right here on the daily, that's about 15% to that low wick. So I wouldn't be surprised. You can also look at it on the 4-hour, which I'm seeing no sign of divergence. Lower low, higher high. RSI that's bearish, lower low, higher high. Yep. So we can move on with Link, leaving with the picture of potential 30% discharge on the weekly, if that does even happen. But nothing surprises me at this point. Anything can happen. As I should mention, this is not financial advice. I'm not a financial advisor, nor am I a fiduciary. Anything I say is for educational purposes only. You may take it as entertainment. I just advise that you do your own research and apply what you see through all of your senses. So we look at the DeFi pulse on the weekly. Here we can see that we did get a wick up to the 236, coming in at $219, rejected on the wick. Now we have a body at 178 current price. I wouldn't be surprised, but we are seeing that we do have weakening negative momentum. But I'm also seeing that 20-day moving average is pushing down, so potentially see a shoot up back to the previous candle top at about $259, which is coming in about almost 20-day moving average at $264. That's on a week, and I could see that happening and then pushing back down even lower prices to where about what? Maybe that's too far down. Maybe just coming back down to 276 again after pushing from 264. On the daily, we can see that we're just being rejected by 20-day moving average. Tried to break above it on the 10th, couldn't hold. February 10th, broke down, came back up, tried to retest it, broke back down again. Now we have weakening positive momentum on the MACD. I can see prices coming back down to 132, which is about a 23% decrease. Even if price jigs wicks back down there again, or we do get some body closes on the way down there, that's what I can see happening. We do have a lower low in price, and would I even consider this a higher low? I would. So lower low, lower. Is this a lower high on price and higher high? So it's hidden bearish, still bearish. So this can be a fake out run up to the 20-day with a candle instead of a wick, and then push back down potentially. Probably not even that high, just to the previous high of the last candle on the daily, which is about 181. Currently at 178, and then push back down, as I mentioned, at 23%. Sell off, move on to AVE. AVE, we have weakening positive momentum on the MACD, downtrend on the RSI, lower low on price, no divergence. I just see price going lower, so we could probably go to about 158, try to find some support. And if we can't hold there, we can make plenty of resistance line. And this is all on a daily. We can even pull the fib up really quick. So until we get back above 178, I wouldn't even see any action happening. Next target for me will be going back down to about 146. That's about 10%. That's what I see on AVE. Look at sushi. Same situation right for sushi. I don't see anything major happening. Potential prices going back down to let's see, going back down to maybe $3.28 if you can't hold this level right here. being rejected by the 20-day, coming into levels of support, but we need to hold this support. If not, we will break down to lower prices, which we can see here. As I mentioned, about $3.36, around that area. I've already went over Ethereum. We can look at Matic really quick. So Matic, I did make a trend line going down and a trend line going up, and it formed a X here. And we can see that Matic is currently finding support at the 326 from the fib, and also on the upward trend. Let's actually make this not really on the upward, just finding support on the 326 coming in at $1.68, which is also the 200-day moving average at $1.68. And this is on the daily, so we want to hold above $1 and close above $1.68 to even stay in the game. To move forward, you want to move up above $1.71. On the 4-hour, you can see that we've been getting a lot of consolidation since February 11th, 19 UTC, all the way until today on the 236. So this is a pivotal point. But I do see the 20-day moving average on the 4-hour pushing down. So maybe we can potentially see a push up, closing above 176, finding support above the 200-day. They're moving up again from there to the 382, which is coming in at 192, and find support above the 200-day moving average on the 4-hour chart at 185, and then keep moving up from there. But we do have weakening negative momentum, and the head and shoulders that was here. So we have the left head, left shoulder, the head, right shoulder. So that move already played out. So potentially we can see push back up to put Matic back in the race. The next level on the daily will also be above the 100-day moving average, coming in at $1.89, 382, $1.92. But we do have on a daily weakening positive momentum. So we'll see how this plays out. In my opinion, I'm hoping we hold and consolidate, and then we get a switch back on to get in a race to move prices up. Last but not least, let's look at curve. Curve is coming into an area of consolidation which caused a previous breakout. So hoping the same thing can happen here. We consolidate, break above 20-day, push the trend back up, cause the 20-day to cross over to 200, 50, and 100, and then put curve back in a race. But until we get above $3.01 and really 18 cents, I'm sorry about that, then we would not be able to get back in a race. Then potentially pushing prices a little bit lower. But we'll see how this plays out. We need to hold above $2.70 to even make that happen. So let's see if we can keep consolidating above $2.78 and then push prices up. If not, we'll come back and reassess. I hope you all find this helpful. Enjoy your Sunday. It just started snowing here, and yesterday it was 61, so I don't know what's going on, but we trying to figure out what's going on in these charts too. So peace out. Stay safe, stay healthy. Get your mind right, get your money right. That's what we're here for, crypto entrepreneurs. Peace out.